when they get greedy, and we had this huge bubble in the most important asset the American public has, housing. I mean, so you had a huge bubble in something you could borrow heavily against. So you could run a margin account effect on a house instead of stocks, and the conditions got very lax. And so when that bubble popped, but people came into that gradually.
Someone's sitting in the shade today because someone planted a tree a long time ago. Warren Buffett. If I offered you $10,000 right now or a penny that doubles every day for 30 days, which would you choose? Most people grab the $10,000. But the doubling penny? By day 30, it's worth over $5 million. That's the power of patience and compounding. The exact mindset Buffett used to build his empire, and one anyone can apply, even with just $800 to start. While most people are searching for get-rich-quick schemes, Warren Buffett has been teaching this fundamental principle for decades. What's fascinating is that the average millionaire doesn't start with massive capital. They start exactly where you might be right now, with modest amounts under $1,000. In fact, financial experts now say that $800 is the psychological sweet spot to begin investing, enough to make meaningful progress, but not so much that you're paralyzed by fear of loss. In today's video, I'm breaking down the 3 simple but powerful steps to multiply $800 or less in 2025. The exact strategy that financial insiders use but rarely share with the public. If you're serious about transforming your financial future this year, hit that like button right now, and make sure you watch until the end for our exclusive bonus strategy section where I'll reveal Warren Buffett's little-known small money multiplier technique that most people completely overlook, even though it's hiding in plain sight. The most important quality for an investor is temperament, not intellect, says Buffett. What he means is that patience and consistency, not genius-level intelligence, is what truly builds wealth. So let's break down the 3 easy steps to multiply $800 or less in 2025.
The human animal will keep behaving pretty much the way it has in the past. So we will have periodic recessions. We'll have an occasional panic, which doesn't all recessions don't come from panics. But the good news is, if you look at the 20th century, in the 20th century, we had 2 world wars. We had the Great Depression. We had the flu epidemic. We had the Cold War. We had the atom bomb, you name it. The Dow Jones average went from 66 to 11,497. With all these terrible things happening supposedly at various times. America works. And when I bought my first stock when I was 11, that was in the spring of 1942.
Step number 1, self-investment and deployment. Now, I know investing in yourself may sound cliche or boring, but it's actually the #1 investment that you can make. Even Warren Buffett takes self-improvement seriously, which is why he said, "The most important investment you can make is in yourself." Invest in your mind. Read books on wealth creation or learn a new skill that you can actively use to generate income. The key thing about investing in yourself is that by doing so, you increase your value. As you should know, making money is all about value. The more value you give to the world, the more the world will reward you with money. So you can use that $800 to buy books or courses or pay for seminars and mentorships. Just find a way to grow your mind and knowledge. Now, the second thing to do after absorbing knowledge and increasing your value is to give value. In other words, deploy that skill you've gained to create an income stream. This is one of Warren Buffett's key strategies. As he said, never depend on a single income. Make an investment to create a second source. Thankfully, with the internet, you can now easily deploy your skill online without spending too much. Remember that you will invest quite a lot of time in your income stream in the beginning. You may even need to invest some money too. This is crucial to its success. Eventually, the business will grow until it becomes so profitable that you can hire more people to help you, and even quit your job to focus on growing the business online. Now that you know what to do for a single $800 investment, let's talk about what to do if you have a recurring investment capability. Let's say that you have a good job or side hustle that brings you consistent profits. So, every month you can add more money to your initial $800. Of course, it must not necessarily be $800. You could start off your investment with $800 and then add $100 monthly. This additional recurring investment makes your money multiply more quickly. As I said in the beginning, passive income is the best. The sweetest feeling in the world is when your money is working for you and multiplying by the day, even when you're sleeping. So, what's the best way to achieve a purely passive income starting with $800?
If you look at what happened in September and October of 2008, there were some extraordinary things done. The Federal Reserve poured $85 billion into AIG, and if they hadn't, our world would be very different. Hank Paulson guaranteed money market funds at a time when 30 million Americans with money market funds were panicking, and when...
Step number 2, invest in stocks and index funds. The quickest way to multiply your $800 passively is via the stock market. For instance, you can invest in the stocks of Coca-Cola, Heinz, Amazon, Apple, Microsoft, and so on. By buying a stock, you become an owner of a tiny part of the company. To invest in stocks, just visit a brokerage, select the stock you want to buy, and then pay for it. When these companies make money, so do you. But here's the thing. While investing in a single company gives you a chance to earn a lot of money, it also puts you at risk of losing everything if the stocks depreciate or if the company goes bankrupt. For instance, let's say you put your $800 in a hot tech company, and then a few days later, the CEO announces a new policy that customers and company investors do not like, causing them to leave and patronize others. This could make the company's stock prices crash, and investors like you could end up losing everything. This is why financial experts like Warren Buffett would advise you to take the time to study companies and do a lot of research, so you don't pick a company that ends up sending all your hard-earned money down the drain. One of Buffett's ultimate rules is, never invest in a business you cannot understand. But honestly, all that research can be very tedious work. Plus, there's no guarantee you'll make the right choice anyway, as businesses can be very unpredictable. So this begs the question, what is the safest and most profitable way to invest in stocks? Well, that's where index funds come in. With index funds, you don't need to pick a perfect company to invest in. You just invest in a group of companies at once. For instance, you could buy an index fund of the top 500 stocks in the US and put your $800 into it. Some index funds pay dividends while others do not, so you'll have to confirm this feature just in case you wish to be paid tax-free dividend returns. Dividends in this case refer to a company's profits that are shared with the shareholders. So how do you invest in index funds? Well, it is pretty much the same process as investing in regular stocks. But don't blindly put money into any index fund simply because it's safer than investing in a single stock. If your goal is to make a lot of money from the stock market, then always look for the best performing index funds and invest in them. Now that you know how to invest, my advice is that you create an automated system so that anytime money enters your account, part of it is automatically diverted to your index fund. For instance, you can set up a system that automatically transfers $100 to your stockbroker account every month when you receive your salary or income. This automation will help ensure consistency and make the entire thing completely passive. But do you really want to make it big in the stock market? How did billionaires like Warren Buffett and Charlie Munger do it? The answer is long-term investment. It's a simple trick Warren Buffett has used to make millions in profits from the stock market. Like Warren Buffett would say, if you aren't willing to own a stock for 10 years, don't even think about owning it for 10 minutes. In one of his famous talks, Buffett explained, stocks are safe for the long run, and they're very unsafe for tomorrow. Berkshire 3 times since I took over has gone down roughly 50%. Did I feel poor then? No, not at all. I knew it may work more over time. American business is going to be worth more over time. That's what you're buying as a business. You're not buying a stock. You're buying a piece of a whole bunch of businesses. But what if you're not a fan of stocks or wish to invest your $800 passively some other way? Well, this leads us to our final way of investing your $800.
When they do that, the economy has to be growing faster.
economy has to be doing well.
And the piece people don't take into account is they're clear that they're going to stay there until the economy grows faster. So it's a
and he
different-
has no pressure on him. In fact, the Fed is the greatest hedge fund in history. I mean, you've got $1.1 trillion financed by currency and circulation, which doesn't cost anything, and then you got about $1.8 trillion or $1.9 trillion from the banks at 25 basis points. And I mean, the Fed is going to make $80 billion or something like that. The Fed is the fourth largest contributor to the United States government's revenues that there is now. That wasn't the case a few years back, but it's 80 or 90 billion a year probably. And it is under no pressure, none whatsoever, to have to deleverage. So it can pick its time, and if you have somebody wise there, and I think Bernanke's wise, and I certainly expect his successor to be, it can be handled. But it is something that's never quite been done on this scale. It'll be interesting to watch.
Step number 3, real estate. Now I'm sure you've heard about real estate investment, and you're probably wondering how $800 could afford a house. Well, thanks to technology, you don't really need to own actual property to make money from real estate. You can simply invest in a REIT. REIT is an acronym for Real Estate Investment Trust. Real estate investment trusts are companies that invest in real estate. It's more like an indirect method of real estate investment because you're not actually owning any portion of the real estate, but rather you're owning a portion of the company that invests in real estate. One major advantage of REITs is that they pay out huge dividends. Usually, they give up to 90% of their profits to the shareholders. Another method you can use to invest in real estate is crowdfunding. Crowdfunding allows you to invest money, no matter how small, into a platform that owns a portfolio of real estate investments. As the investments bring returns, you will gain profits. Most of these crowdfunding platforms also pay off dividends to investors, but their dividends aren't as much as what you'll get from REITs. However, crowdfunding is more like owning a tiny portion of real estate, unlike a REIT investment, where you own a tiny portion of the company that owns the real estate. Warren Buffett explains why real estate could be a good investment. Real estate in general is good during inflation. If you built your own house 55 years ago like Charlie did, or bought one 55 years ago like I did, it's a one-time outlay. Whereas if you're renting, you get an inflationary expansion in replacement capital without having to replace yourself. Now, as promised, here's Warren Buffett's #1 secret to multiplying small amounts of money: compound interest. Buffett calls compound interest the eighth wonder of the world. He explains it this way: my wealth has come from a combination of living in America, some lucky genes, and compound interest. The power of compound interest means that even small amounts can grow significantly over time. For example, if you invest $800 at an 8% annual return, after 10 years, $1,727, more than doubled. After 20 years, $3,731, more than quadrupled. After 30 years, $8,062, 10 times your initial investment. But here's where it gets interesting. If you added just $100 per month to that initial $800, after 10 years, $18,416. After 20 years, $59,486. After 30 years, $150,129. That's turning $800 plus small monthly contributions into over $150,000. This is why Buffett says, someone's sitting in the shade today because someone planted a tree a long time ago. The best time to start was yesterday. The second best time is today. If you found value in this video, smash that like button and subscribe for more wealth building tips. Drop a comment below, letting me know which of these 3 steps you plan to try first. Remember, wealth isn't just about how much you make. It's about how much you keep, how hard it works for you, and how many generations you keep it for. Hit subscribe and turn on that notification bell so you never miss a chance to simplify money and Muchafy wealth. Always remember, simplify money, Muchafy wealth, one smart decision at a time.